favorite friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that sounds like you, you're in the right place at the right time. Now, it doesn't matter if you are new here or if you are a returning viewer, but I do want to give a warm welcome and just thank you guys for clicking on this video and deciding to spend some time with me today. My channel is geared toward teaching beginners how to trade, and I've done my best to organize the content by playlists of some of the most frequently asked questions or topics that I see new traders struggling with. So I do encourage you guys to explore, and if you don't find what you're looking for, I am open to taking suggestions of new videos to create in order to help you guys learn better. So just make sure that you drop them down below in the comment box and turn the notification bell on so you can look out to see if your video recommendation is ever posted. Now, in today's quick video, we're going to be doing something called live backtesting, and we're going to be using the 4-hour time frame. Now, backtesting is just a way to study what's happened in the market in the past so that it can help you make better decisions for your trades in the future. Now, TradingView has this really cool feature called replay. And when you put the chart in replay mode, it allows you to go back to any desired point in time for you to study, but they've updated it to select a random bar so that you can do a real analysis as if the market was there at that point in time. So I'm going to go ahead and put this in replay mode, and I'm going to come down to the bottom of my screen and I'm going to click random bar. Now we can see that the market has taken us to a random place in the chart, and we're going to do our analysis in real time as if this is where it currently was. Now, the purpose of back testing again is just to help you practice and get familiar in the chart. If you have a strategy that you're using or indicators that you're using, if you want to be sure if it actually works, one of the best things that you can do is just to simply back test it. Now, Mark Douglas is someone who speaks a lot about market psychology, and he will say that you need to be looking for the best out of 25 trades and not attached to one individual outcome. So I'm going to go through my confirmation checklist on the 4-hour, and we're going to see if this trade will be profitable or not based off of following that process. So the first step that I do in my trades after I've checked the news is I'm going to identify these highs and lows. Now the highs and lows are important to identify no matter which time frame you're on, is because these are going to be your target areas for take profits or potential pending order entries. Now I've decided to put some horizontal lines at levels where I can see the market had some previous activity. So I can see how this was a previous area of resistance or selling point, and then the market broke out and it became an area of support. We can see how the market revisited this area 1, 2, 3, 4, 5 times, and then it sold back down to support. And then it bought back up to the same resistance, and then it sold back down to the same support. So being able to identify these levels are just going to help you moving forward. And it's something you should do before you enter your trades because it lets you know where you should be targeting. Now, after I've identified my highs and lows, I'm also going to be looking at my stochastic, which is the only indicator you can see on my chart right now, because the stochastic tends to give me really good confirmations for buy or sells. And not only that, it gives me my entry signal as well. Now, what I mean by that is if I'm looking at the stochastic and it's facing down, if the orange line is on top, and if it's crossed below any of these significant levels, most likely the market will be selling. And it's not until the market starts to do the opposite thing, meaning cross back above any of these significant levels, facing up with the blue line on top, I would take my trade for a buy. So it's pretty nice to have the stochastic not only give me confirmations for my trade, but help me determine if I should enter or exit and at what point. So here I can see that I can see that the market is near an area of resistance. However, I do have my stochastic facing up. I have it above the significant dotted line at the top. So it looks like I wouldn't want to make a move too quickly just yet. Let's actually go to the next candle to see if we can gather some more insight. Now we can see as the market went on and we went to the next candle, it didn't yet break past this high. And that would be the final thing I'm looking for. Is there a break of structure letting me know which way the market actually wants to go? Now, a break of structure would be if we can see the market is buying and selling within a particular zone, and then it literally has a break of structure outside of that zone, that lets us know the market wanted to buy. So far, I have gathered that if the market breaks above this top line, I would potentially buy. And if it breaks below a previous low, I would sell. And I already have the areas that I would target. Because the market is based on patterns, it tends to repeat itself, which is why it's super helpful to just take a little bit of time to do your analysis. So let's go to the next candle, and we can see that the market is still consolidating, right? So you really want to be patient and you don't want to make any major moves until you get that break of structure confirmation, at least for me, regardless of what your stochastic is saying. Because imagine if we would have just entered the trade for a buy, we would have been in limbo for 8 hours as no significant movement above or below a previous high or low has been made. So let's just press play and continue to see what happens. Now we can see that the structure is continuing to be held. The market is still moving sideways. And again, it won't be until we actually get a break of structure here where I would want to sell, or a break of structure here where I would want to buy. Now, this may seem like a lot of waiting, but you don't want to rush your setups. And if you don't see a setup, you can simply not trade, or you can look at something else. This is just showing you how I would take my entry on the 4-hour time frame and letting you know that I don't rush it. I go through my checklist and I wait for the right time to enter. So we can see that structure appears to have been broken on this candle, meaning the market was basically selling at the same area and it was buying at the same area for all of these hours until we get the break here. So this would be a good opportunity to enter the trade for a sell, setting our first TP at this level and our second TP at this level. Now, if you are familiar with pending orders, you could set a potential sell stop here, meaning that once the market reaches this level, the trade would trigger and then it would continue to sell, potentially hitting these other TPs. So not only do we have that break of structure that finally came along, but we also have some strong selling confirmations on the stochastic. We have the orange line on top. We have the stochastic facing down, and we have a significant cross above the top level and the middle level at it as it is approaching the bottom line. So let's just go ahead and see what actually happens. We're going to enter this trade for a sell. I'm going to set my stop loss above a previous high, and I'm going to set my take profit at a previous low. And you can use the exact level or you can use any low. Any previous low will be a good entry. So we hit sell. We can see that our trade is in profit. Our trade is dropping. We can see how that area of support became resistance, but ultimately we were able to secure profit in this trade just by following a simple checklist and by waiting for it to play out. Now, you could think this is just a one-off, but I do encourage you guys to backtest this on your own charts and really see what happens. The market is extremely fractal, which means you'll be able to find patterns on every single time frame. And as the market continues to go on, we can actually see how it is respecting or rejecting previous levels. And you can just look at the stochastic to see what type of information you can gather from there as well. Now we can see this previous area of support continue to be a strong area of support. This area continued to be a strong area of resistance, and we would just have to wait to see if structure is going to be broken above or below that previous support or resistance, and that'll help us determine if we should buy or sell in our trades. Now, if this video made sense to you, just go ahead and drop a 7 down below in the chat. I would love to hear your feedback on this simple strategy or if it's something that you're going to try. If you have questions, you can leave them down below in the comment box, and I'll do my best to get back to you as soon as possible. Now, if you are interested in learning from my online course, which puts the videos in a cohesive way and builds on the knowledge, there's weekly trade ideas, and you get to work with me one-on-one directly to improve your trading. You can find that information down below in the description box. And I look forward to working with everyone who's serious about leveling up their trading in 2025. But that's really all I have for you guys today. Until next time, rich friends.